Yeah. So first of all, in each state it's different, but most states, you can't. You're either a licensed public adjuster and you're a contractor. You can't do both. In
Mm,
Indiana, it's kind of that way. So anyone saying we're going to handle the claim, well, a roofer is a roofer. He cannot negotiate the claim. He cannot discuss claim policy with the adjuster. He's there to put the roof on. He could say uh, what the damages are going to cost or what it would cost to replace the roof. But technically, anything to do with the insurance, he can't do. Whereas all city or we do is handle claims, negotiate claims, get our clients paid, and then they're able to pick that contractor, right? Because what those storm chasers do is they'll sign, they don't even sign or give you estimates. They sign, work authorizations, these contracts that state whatever the insurance pays, we'll do. We're taking the money, we're taking your deductible. You don't see a penny.
hmm.
Well, in our case, we got you paid on each claim. You're then able to get bids. You're able to get estimates on each claim. But the goal is ultimately to put all that money in your pocket, and you decide, hey, if the building's only 2 years old or the damage, is not that significant, hey, you don't have to replace it. You got the ACV check. You can take that money and put it into something else.
Yeah. And can you explain the ACV track, what that
Yes,
means?
yeah. So the actual cash value. So each when we estimate damages and we settle with the insurance company, it's always based on the replacement cost value. What does it cost to replace today? Then you take the depreciation based on age, condition. You depreciate that replacement cost value item, and then that's how you get to your actual cash value. What is it worth now? So on a claim, let's say you replaced a roof a year ago, now it suffered damage. Well, it costs 20,000 to replace today. It's only 1 year old, so we're only going to, for example, depreciate $1,000. Just throwing numbers out there. Then you would be getting an actual cash value of 19,000 minus your deductible.
Got it. Yeah, yeah, and I think that's what a lot of people don't realize, is that there is depreciation over time, and I can tell you, like, so when Andy and I started working together on this particular instance, we kind of weighed out the options, and he, you know, he had to go to battle with the insurance company on some of the things that they said were damaged or not damaged, compared to what reality was. And so I look back on it, I'm like, had I not had your experience, I would have, I mean, the payout would have been a fraction of what it actually was, because you went back and forth with them so many times. And I mean, I think the whole insurance business right now is kind of built on the fact that we're going to pay as little as possible and hope that people don't fight back because it's their right to get the money. But, if they accept our offer, then we're not going to offer them any more than that. We're going to offer them the bare minimum. So, has that been your experience recently?
Yes. So you just quoted a famous book that in our industry we refer back to. It's called From Good Hands to Boxing Gloves. There was actually just, if you maybe watched, there was a Senate hearing right now against Allstate and State Farm, and they quoted that book, From Good Hands to Boxing Glove, and it's a book about, if your listeners ever want to check it out, it's a great book. But it's how Allstate hired a McKinsey group. They came in and they kind of showed them, how they can really take their company to that next level. Again, Allstate's, I think, in the billions right now, which good for them, great. But basically, that their whole their whole research and everything they presented to Allstate was 90% of claims, or 90% of claims go unfought, meaning that the homeowner or the insured doesn't do anything, meaning they just take the check and then they're done.
Mm-hmm.
So their goal was, if you want to go to that next level, is if you underpaid all the claims, only 10% or only like 5% people will actually, very small amount will actually fight the claim.
Mm-hmm.
So that's exactly what you just said. Yes, that's what happens. If they know, and now it used to be just Allstate, but now everyone's taken that model and everyone does the same thing, meaning they'll underpay claims, they'll delay them as long as they can, and then either deny it, look for a way to deny it, and if not, they'll just underpay it, and most likely you would have taken a check, so you would have been in a hurry, hired a contractor, done the work, because you don't know any, people don't know any better.
Yeah. Yeah. When
So
that check is in front of you, it's like you kind of feel like, well, take it or leave it are the options, but you don't realize that, no, you can actually push back, especially if you have the knowledge of saying, okay, this is why, because you have to have the supporting evidence. And if you
correct.
do, then you can often increase that claim amount. So, and it's a great point too on the, on the storm chaser point. Like when I was comparing options, the big difference to me was, this one guy in particular was like hounding me, like, these guys get on it and they're like, calling you every single day saying, "Oh, just sign this thing and we'll take care of everything." And he was like, we'll take care of it for whatever claim we can get. We'll pay for your roof minus your deductible, which sounds great. It sounds appealing, but at the same time, like you said, like the damage is done. It should be up to you to decide when and how you replace it. And these guys, like, he wanted me to sign something saying it's up to them. Like they're going to take all the money that we get, no matter how much it is, and replace this roof, which the payout may be way more than what it actually would cost me to hire a different roofer to do it. It's your right to get that cash and make the decision, which I think was the big benefit that I found with working with you guys. Is like they actually just sent checks, and we could decide what damage needed to be replaced, and if it needed now or down the road a little bit, which is a good
And
option to have.
and people don't know, Kirby. So as soon as there's a claim, right? I think you mentioned they call their agent,
Mm-hmm.
and their agent says, "Well, I got a guy. I have a couple guys that do roofing, that do claims, that do construction." And then you got people knocking. If it's a fire, there's 10 people knocking on your door. Um, there's always everyone just trying to take the entire pot.
Yeah.
And people are so afraid, thinking, okay, well, I'm just going to trust the agent and whoever restoration companies they send. All of a sudden, there's 3 different vendors pulling your stuff, boarding up your windows and throwing stuff out. And then we come in, we're like, who are all these people? And they've already got checks. And then the client's left with a small amount of policy because they've eaten up their policy limit. So people don't understand that money for their entire claim is theirs. It should go to them, and they're in charge then to pay people, get estimates, and use that money for repairs.
Yeah.
Or they don't have to, because you are owed the actual cash value. There's a lot of claims we go in on, Kirby, where our goal is ultimately with the insured is just get the actual cash value check as high as we can, so they get that money, and then they don't want the property. They might want to move on to a next property, or might want to do something else with the money.
Yeah, that's a good point. And some of these national restoration companies that you see on TV, I've priced them before compared to like a local contractor, and it's like multiple times as much money for them to come in. So they come in, they take the entire amount, charging that much. Whereas if you had gotten the check, you could either do it yourself if you wanted to do the work, or you could hire a local person. We're way cheaper, and then it's it's a much better financial decision.
Oh, yeah.
So I love that.
And I think that Mike, I think when he was on your podcast, his situation was a little bit different. He had a fire, so it's a much bigger claim. But same thing. Ultimately, he had his own contractors. Most people in real estate, and most people, we own real estate. My wife. So when I looked at your claims, when we talked, we look at it from a standpoint of, okay, if I was in Kirby's point, in his shoes, how would I want this handled? Do I want some of these properties? Actually, am I going to fix them? Or maybe I'll use that money to invest it somewhere else. So we look at it and we looked at all the properties, said, okay, these are for sure. Some of them didn't have that much of damage, but we could still maybe claim it. But we look at all the options and then present it to our client, not just file claims because, hey, let's file a claim for everything for Kirby and then see what happens and, see what sticks. That's the wrong way. But again, storm chasers and these people that solicit, most of the time, these are guys that are just signing contracts. They're getting paid. They don't have no clue what they're looking at. They know there's everyone else is knocking, so there's something. So it's just a game of numbers for them. If they sign 10 roofs, 5 get approved, 5 they do, the other 5, that's when we get the calls. Well, we had a guy we signed, we did a couple claims, and then these other ones, we have claims that they just they denied us, or they only. Well, it's too late. Why isn't that guy? Oh, he was just they're just a roofing company. Oh, because now they're just a roofer, but before they were going to handle everything.
Yeah.
So and there's and roofers and contractors and PAs coexist in many states. In some, it's in Illinois, for example, it seems like, well, either you're one or the other. But in most states we go into, people love working with PAs, and we love working with contractors, and we work together to help people.
Yeah,
and that's how it's supposed to be. So
yeah, absolutely. What are the biggest mistakes you've seen property owners make in this process? I know we've talked about some already.
Yeah. Starting with the policy itself, a lot of people, they have to be really really careful when going from a long term rental. So let's say you own 10 properties; they're all long term rentals. All of a sudden, you say, "Hey, I'm going to turn a couple of these into Airbnbs,
Hmm.
short term rentals," and now a fire happens. And now the policy strictly has a clause or an exemption exclusion that states we do not, if it's a short term rental, we do not cover it. Airbnb, they'll literally state those. And a lot of people we've actually known that we've gotten calls from have been denied because of that
Mm,
exact reason. So I would start with making sure if you are doing short term, long term, that your policy, you advise your agent what your goal is or what you're doing. If you're living at the property in one unit, maybe the other two are short term rentals, make sure you say the exact, even in an email to the agent, so everything is out there. So if something ever comes back, you had it on paper. Hey, no, I advised this is my property and this is the intention I had in this property.
yeah.
Second, when you do actually have a claim, the most important is definitely protecting it from further damage. If there's a fire, they broke some windows out, put a hole in the roof, try getting it tarp and try boarding up, closing everything, taking any really like valuables or anything like that. And then that's it, right? You want to close it off, board it off, mitigate from further damage. That's the biggest thing because insurance companies always look at that. Did the insured, the first thing they ask when we call a claim in, like for your claims, did you guys mitigate? Well, in your terms, there's no hole, there's no openings, there's nothing really to mitigate. Um, but if let's say the winds came in and tore off shingle parts of your roof, then yeah, I would have said, hey Kirby, you got to get your roofer in there, make sure he throws tarps here, so then
Mm,
it's protected. Because now, if a rainstorm comes in, water gets inside, and you didn't mitigate, they can deny the claim or
wow.
deny the damage that's inside
Yeah.
because they can say you never mitigated. So that's one of the biggest. And then following that is, call a public adjuster if you don't know one. Um, Try to ask for references. If not, Google is a good option or other associations. But you want to get someone right away because the when you call that claim in to your insurance, the words can matter. You can say one word and it can mean denial or delay of a claim for 3 months plus, or I mean, it can matter by that much. Like using the word flood when it's a pipe break. Mold's not covered. Now people say, well, we had water and there's mold everywhere. Well, mold's not covered, so now there's insurance right away puts up a red flag and says this is probably long term damage. So being careful what you say is one of the biggest things. That's why we advise and we always tell people when I'm on this podcast, I always say call a public adjuster, not just saying our company, but call anyone because it's going to save you a ton of money, push the claim quicker. And there's just so many benefits.
Yeah. You're like a totally untrained person going up against someone who's like a ninja at this, who, they're trained to not pay you as much as possible. So you really need someone who knows how to speak the language. And to your point around the policy, I think those are all great takeaways, things I wouldn't have thought about. But um, to your point around the policy up front, making sure you have the right policy. I think that's a good point if you're doing short term rentals. And I obviously have a coaching program where I teach people how to do high cash flowing short term rentals, and I get asked all the time about what insurance company to use or what policy to use, and proper insurance is one that's like one of the leaders in the space. And I always tell people get a quote from them just because they are a leader in the space. But what I've seen is that typically their quote is about 2 to 3 times as high as a local insurance broker. And it seems like their policies are very comprehensive, but I also feel like you're paying for like these 1 in a million scenarios that probably aren't the best use of your money. And when you look at that compared to like a typical short-term rental policy from a local broker, it's less comprehensive but covers all the main items. Are there certain things when you're buying insurance, like specific coverages, you feel like okay, you really need to have this, and then others that you feel like are a waste of money?
Yes, for sure. There's a ton. One that every policy should have is law and ordinance included in it, which is if something happens, like for in your properties, you had law and ordinance coverage, which meant they paid 10,000, but now the city mandates that you put ice and water and mandates this and this on the roof, right? Well, now we can get that at least agreed to up front. Once you replace the roof, the insurance owes for that. That starts adding up. Well, if you have a fire and now the entire electric has to be brought up to code, insulation has to be brought up to code, because the energy codes and the building codes change, through the years. Every year, everything gets updated. So
Yeah.
that's a big one. Also, sump pump, water backup coverage. If you have a finished basement, you're renting that basement. Even if you're not, and it's a finished basement, and water backs up, and out of the sump pump, or the sump pump malfunctions, and you don't have that, well, now the entire basement's on you. That
Mm.
coverage is not that much. It's a couple bucks a month, but you're adding 25,000, of coverage in for that basement.
Yeah.
So that's a big one. What you have to be aware of is exclusions. Right now, a lot of policies, especially older properties, they're excluding damage to roofs, meaning they'll pay for anything, fire, anything, but if a damage happens to your roof, either they'll throw in a really high deductible or exclude certain damage to your roof. So basically, a lot of things we're seeing now on roof claims, basically you're only covered for fire, water, anything outside, wind and hail. It's with high deductibles, with the exclusions, you're not even worth filing the claim. And that's why with yours, the first thing we did was we wanted to look over all the policies, because you had, I think, 3 or 4 different carriers between all the properties.
Hmm.
So we wanted to make sure, what kind of coverage you have. And then knowing, for example, you had Erie, I think Erie Insurance on one of them. We know Erie policies. We know that they like to throw those exclusions for metal and other stuff. So we wanted to make sure that we knew what the policy showed before we actually filed the claims.